Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Hope everybody's having a fantastic weekend. I took Thursday off, guys. My dog came to visit for spring break, and I had my sister and her husband here, so we spent some family time together. But this is a pivotal week in the marketplace. We have Powell this week coming off of back-to-back months of hotter inflation. This is very key to see what Powell does because Powell was basically dovish in front of Congress. He was basically dovish in prior comments. Is he going to be dovish again? If he is, you could see the markets all retest their highs. Now, if he's not, because inflation is going up, so he decides, hey, you know what? I need to grow a pair and actually push back on this, maybe take away a rate cut, push him out, change the dot plots, whatever. If he's hawkish, then we could see the beginning of the topping process. But right now, guys, all the rats are trapped. The Fed is trapped with hot inflation after being super dovish and pivoting, broadcasting that they're going to be cutting rates. Money managers who are overweight the Mag 7 are trapped. Retail's trapped because they all buy tops all the time. And we need to see how the charts are setting up. And guys, remember, what has been my thesis on the marketplace going back to the end of last year in December? I told you I'm looking for a peak, a retracement, and a blow off top. Now, based on our fractal pattern, based on the last 4 years, how we retraced through February, bottomed, and then move up to a March, April peak, we haven't done that yet. We got our 20% wave move up, which is now 25%, but we never got that retracement. That retracement is what's coming. And to understand this, you need to understand market cycles because market cycles repeat over and over again. And if you don't know where you are in the cycle, you are doomed. This is very important to note because you hear people argue about this on the business news, right? You hear people say, oh, we're early cycle. Guys like Tom Lee, guys like just any other money manager. This is early cycle bull market, next 3 years, next 5 years. This is great. It's fantastic. And then you hear the occasional person, including myself, tell you this is late cycle behavior. And there's hallmarks for that. But what is the cycle? What's the easiest way to depict this? There's tons of images of market cycles on Google. Go back to the OG Charles Dow. Right? What did Charles Dow do for his writings? He basically was the first natural law trader. Now, to illustrate this to you, I had Lee create an animation. Don't worry, Lee. Walt Disney's not going to be calling you anytime soon. Lee, throw up my circle. Understand, Charles Dow was the first person to compare wave movements to that of the price movements. Charles Dow based his retracements off of a circle. Lee, show me 33%. Lee, show me 50%. 50% of a circle, guys. And Lee, show me 66%. This is based off a circle. Charles Dow and Richard Wyckoff were good friends. They had lunch together once a week. Most people are familiar in some facet of the Richard Wyckoff market cycle, which is what? Accumulation, markup, distribution, which is the topping process, and then markdown back to accumulation. Again, illustrated by a circle. The OG traders all knew this. Jesse Livermore once said, there is nothing new in the marketplace. What's happened before will happen again. Understand where you are in the cycle, and we are very late cycle, which is why the beta, such as the Russell, has not taken off and is still in a bear market. So what we need to look at, guys, are a couple of things in the marketplace before we get to our targets and prices, because Bitcoin hit our target. We got to our 73.5. Been crushing that Bitcoin TA since October of last year when I gave you that long, which went up, 120% since then. But Bitcoin's doing exactly as we thought it would. And we need to look at the other marketplaces. But guys, I want you to understand, we talked about in the last couple of videos, inflation in general, right? I've showed you the trueflation, saying inflation is actually 23%. We talked about food inflation being actually about 30%. Well, the NBER, I thought you guys might find this interesting. National Bureau of Economic Research. That's the organization, quasi-government, that actually calls the recessions, okay? They just did a study where they took the 1970s CPI and applied it to today. I'm going to play a video clip from Kevin Hazlitt for you to detail that for you. We'll talk about it on the other side.
I think that the inflation isn't going down and that people will continue to be very upset about it. And, you know, there's a new study at the National Bureau of Economic Research that highlights a change in the methodology of the way we estimate inflation today that's having a big impact maybe on making the measures underestimate inflation. The idea is that when Volcker lifted interest rates a lot, they took interest rates out of the inflation measures. And so if you buy a car for $30,000 this month, then the monthly payment, right, is going to be a lot more than it was 3 years ago. But if you spent $30,000 on the same car 3 years ago, they'd say inflation is zero, even though the monthly payment is up a lot. And so these researchers corrected for the fact that interest payments are a lot higher now. And so your monthly payments on, you know, anything that you buy on credit, your credit card debt, all those things don't go into the inflation measure, but they really affect the cost of buying stuff. And if you correct for that, then in the study, then one of their estimates of what current inflation is about 8%. And so if inflation is really running at about 8%, then that's something that's going to make people really upset. In fact, what the authors did, by the way, Neil, you would love this, is they used the methodology from the 70s where they still had interest rates in the CPI. And they said, well, what if we use that same methodology now? And if you use that measure, then inflation just a few years ago peaked at 20% and now it's at 8%. And so I think that the government should be worried about these things, not denying them.
So yes, that's right. Right now we would be at 8% inflation, and we would have peaked at 20% inflation this cycle. Remember, in a previous video, I told you Larry Summers took today's CPI, brought it back to the 1980s with Paul Volcker, and we had identical inflation. And Powell went to 5.25 on the Fed funds rate, and Volcker went to 20%. That's why we have this embedded inflation and everything across the board, and nothing will get cheaper. Kevin Hazlitt also said earlier in that video clip, if you want to go watch it, that if you took the most recent CPI print and annualized the supercore, which is what the Fed supposedly likes to watch, you would be at 7% inflation. Does that sound like anything close to the 2% target? That's why this week is so pivotal in the marketplace, because if Powell is dovish, watch for a retest of the highs or new highs. If Powell is hawkish or comes off and changes the dot plot, takes away a rate cut, does something, then look for the beginning of this topping process to finally start to break the uptrends and start breaking down. Because where we are right now, guys, in the cycle, Lee, I need another circle. Keeping Lee busy. If you look at the circle, Lee, show me 90 degrees and 180 degrees on this circle. This is the spring and the fall equinox and natural law trading, guys. These are key market pivot points. Some of you are rolling your eyes. That's fine. But just let's go back for the last 24 years of market history. When did the dot-com bubble top? Literally the day after the spring equinox, March of 2000. When did it bottom? Just after the fall equinox in 2002. When did the accelerated drop happen in the GFC? The fall equinox. When did the market bottom the GFC? The spring equinox. When I say spring and fall equinoxes, guys, I'm looking at a 3-week window around that time frame. And when did, of course, the pandemic, the plague happen? The spring equinox. Now, be aware of this, because what we have coming up right now is literally the spring equinox, the day after Powell. And then, of course, on April 8th, long-term subs to this channel already know what I'm going to say, the total solar eclipse, the last total solar eclipse visible to the U.S., I think, until 2045. We did a whole video on solar cycles. We are also in a year of solar maximum, an 11-year cycle, which got pulled forward from the end of the decade to now. Lee, throw up the solar cycles chart. Why is this interesting? 1929 was a solar maximum. If you look at .C was a solar. You have to look at key points in the marketplace. We have an extended rally that's topping, looking for our retracement, our drawdown, and then the move to the blow off top. That move to the blow off top could get really tricky if inflation keeps going up. The market's already pricing in CPI swaps for next month, inflation to go up once again. So this is a key market point. All of you need to be aware of, all of you need to watch. Be sure to like and subscribe to our shadow banned channel. It's the only way you're possibly going to see videos from me. All right, Lee, without further ado, let's start the show. All right, everybody. This transmission, as always, is brought to you by our two fantastic sponsors, SimpleFX and BingX. On both exchanges, you can trade all of the equities, commodities. You can trade the cryptos, guys. Check out those exchanges. Message Lee with any questions. I'll pin them in the YouTube comments. It's also in our video description. And both of them will pay for your first month on our Discord with a bunch of freedom-seeking individuals here in the marketplace. All right, guys, we're looking at the ES1. We had contract rollover. Looking at this wave up, 27.5% on the E-mini for the SPX, okay? We did not get our normal 20% move, as you can see. With the contract rollover, we got 27.5%. So let's look at this on another chart. Let's look at a clean chart on a 3-day. If we start to get our breakdown, clearly this is intact for an uptrend, okay? I don't think anybody can argue that. Doesn't matter how extended it is. You have higher highs, higher lows all through the sequence, but this is what I want to watch is where this can retrace to. And I can tell you without fibs, you have to watch the 4,800 level and you want to watch these July highs of 4,600, 4,630 level, right in that range. But let's go ahead and look at fibs. Two ways you can look at fibs here in the marketplace. You could start at that October low, right? You can go to your October low down here, pull this up to your top, and you can say, I already know what I'm going to say. The 618 is the most commonly retraced to fib. That's 45.55 here on the E-mini, right? That's a steep drawdown here on the E-mini. I mean, it's long overdue, but let's just measure this real quick. If we go to the 618, it is a 13% drawdown. What I like to do when I'm looking at these retracements, guys, I always try to give you realistic numbers. Remember, where was the broadest participation? It was all the way into the Santa Claus rally. Since then, as I've said many times, this whole rally up has been divergent. So what I like to do is take my fib retracement, and I want to pull it from this candle down here. What is this? The January 5th on a 3-day chart. Pull it from that candle. This gives me some other numbers I can look at here because I'm looking at the 786 at 48.20, and then I'm looking at the 1272 at 45.51, right? So if we go from our peak here down to the 786 at 48.20, that is 8.26%. We go down to the 1272, that's your deeper retracement of 13%, which puts you back in these highs over here from September, from July. So that's the two areas I'm looking. In general, I'm looking for an 8 to 10% correction. But to do that, guys, if Powell comes off like a dovish, what, I can't even say it. But if Powell comes off super dovish once again, you can see this retest the highs again, right? So that's what you need to be aware of when we're looking at this. Let's go ahead and bounce this to the 1-day chart. Look at this. Indicators, again, nothing's changed since the last video, guys. This is all massively bearish divergence. Since the Santa Claus rally, everything has been bearish divergence, momentum, bearish divergence, money flow, fewer people paying higher prices. This is FOMO, guys, and FOMO can go further than you think and last longer than you think. It doesn't matter. And that's something I want to share with you guys as well. A lot of us like to think that we are smart and can understand more complex concepts than other people. But what I think doesn't matter. What you think doesn't matter. What you need to do, which is why I play so many George Carlin clips just as a reminder to you, is understand the average person is an NPC. They are sheep. They are stupid. They're easily influenced by the Ponzi media on TV. You actually have to take yourself and put yourself in their shoes. This is why you hear people say these little euphemisms like the market can stay irrational longer than you can stay solvent. You know, these stupid little expressions that have come along the times is because most people don't know anything, right? So that is what you need to understand when you're looking at targets and understanding how you can have extended moves in the marketplace is most people right now are super bullish. They're not going to be afraid until you start breaking down in the marketplace, taking out some of these fractals, getting back below 5,000, and you start seeing some market movements here that are telling you the market's going to roll over. And of course, if we want to see more upside here, guys, you got to get above 52.57, and that's really going to hinge all upon Powell. Let's move forward to the NQ, the E-mini for the NASDAQ 100, guys. Let's just look at this current trend here. Pull our current trend. Let's get a fib projection here. Look at that 1618 hit 18,695. What was the extra candle here? 18,691, $4 on an $18,700 asset. And there's your rollover. But that rollover, guys, keep in mind, higher lows in trend, okay? Higher lows, higher highs, all the uptrends are intact. What you're doing now is you're starting to see the market run out of steam, and this will hinge on Powell. But we're in that pivotal time of the marketplace where you get key pivots in the marketplace. And my core thesis remains the same. Looking for these retracements, then a bottoming, and then a blast off to a blow off top. The big caveat to that is going to be inflation, if it keeps increasing, may not get the blow off top. But what we want to see now is how the market behaves. 18.7 is your key resistance above you, and you need to start taking out these fractals below you. But let's look at some targets here on the NASDAQ where this could actually go to if it starts breaking down. If we utilize our same thesis here, guys, which is December over here was the peak as far as participation in the rally. Let's go ahead and take this candle January 5th, bring it up to the top. Looking at our Fibonacci retracements, the 786 takes you down to 16.8. The 618 is at 17.2. And if this was to get deeper, then back to the July high, September high area, I'm looking at 15.7. So 15.7 all the way up here to the 17.2, 16.8 range. And if we measure this, let's go ahead and look at this here with the price range tool. If we measure this, the 618 is 8% retracement, 786 is a 10% retracement. And if we come back down to those July high, September high areas, it's a 16% retracement. What am I actually expecting? Well, if we get 8 to 10% on the S&P, I know the NASDAQ will retrace more. So I'd be looking somewhere around that 16.8, maybe down to 16K, 16.5, 16.6. We'll see. Usually you see a stronger retracement in the NASDAQ. But for right now, this is what you have to watch, upside and downside. And of course, the indicators are the same, guys. We can probably just skip this because it's the same. Bearish divergence all the way through, bearish divergence all the way through on the daily time frame. Nothing new under the sun here. We look at the Dow as well. Here, let's go ahead and pull a fib. See what we got. If we go to our December rally up here, so let's do the same exact thing to stay consistent. Fib retracement. What are we looking for the Dow to do? The Dow is either going to come down here to the 38,218. Right now it's at 39,153, 38,218. And if it starts really breaking down, taking out 37K, 37.3, then what you want to see is if the Dow comes down and if it holds over here as July high, that happens to be the 1618, almost to the penny. 35,823. I expect the Dow to retrace close or similar to the S&P, okay? So if we look at this, the 618 is that's only 4%. It's definitely going deeper than that. So you look at the 786, it's a 5% move. This is because of the nature of how the Dow moved up. But if we look at this coming down to the 1272, there's your 7.7%, which is 36,652. And then of course that July high, there's your 9.82%. 35,823. So these two retracements seem like the two most logical to me. 36,652 all the way down to 35,823. And of course, same thing, bearish divergence all along here since your December highs, okay? Let's go ahead and move forward. Looking at the Russell, again, late cycle behavior. I told you I did not think we'd take out that fractal of 2097. Got some wicks above it. Haven't been able to take it out. I have the Russell going down to 18 something. Let's see what we got here. We have let's pull it this way. We'll pull it from the base of this peak up. So let's go here. We have the Russell coming down to about 1845 or 1770, depending how steep, stark, and dark these drops can be, okay? And if we pull the fib just from the base of the rally from October up to your current high, there's that 1823 number on the 618. Right now, the Russell is 2063. Small caps, especially a third of them in the Russell that do not make any money, are going to hold down this indice in general, guys. They're very rate sensitive. If Powell pushes back any way at all, any shape or form pushes back, you could look for a big sell-off in the Russell, and be aware of the shapes that you've already made here. 3-day double top, right? Your neckline is 1937. If you can take out 1937, get some candle closes below here with a hawkish Powell, watch for the Russell to continue to break down into the low 1800s. Moving forward, let's talk about Bitcoin. Man, Bitcoin, was it magic? How did we get this target, guys? Couple of ways, right? So we can take our fib. We're looking at a 5-day chart here, but I'm looking at the January 11th candle. The Thursday the 11th, January 2024 candle. And then we look at this, we pull this back down, and this is exactly what we hit, right? Right from the breakout of right from the low of our diamond pattern, 73,765. Look at the candle, look at the Fibonacci. But how else did I find this with confluence, right? Remember, I measured between the two tops, 6.5%, 6.44%. So I took the second top and I said, market geometry, if we can come up to 73,765, 6.78%. This is how I got that top. Will this top hold? For right now, it is. I'm expecting this to give us some resistance here. If the markets are topped right now, if they start breaking down, then what I'm expecting for Bitcoin, as you guys know, is Bitcoin to come down between 43 and 49K for a retracement, right? That's what I'm expecting. Bitcoin to come down between those two levels, and we could see 49 to 43K Bitcoin before we base and break out for a blow off top. That's the move I'm looking for in Bitcoin. It has not changed. We've been talking about this now for weeks and weeks and weeks. And so far, everything since October has been tracking absolutely beautiful. So what am I looking at in a smaller time frame? Smaller time frame, I want to see what Powell does. Is very important to me. Some of you may not trade with outside at catalysts like that, but I do. Right now, we're at 68,312 on a BingX chart. Our high up here, 73,765. I want to see if we can hold below 70, 71K, where we come up to here on a retracement. Obviously, if Powell's dovish, we could easily retest the highs and possibly move up, right? So I'm looking at that catalyst, but I want to see if we start breaking down. When we start breaking down, looking at the 1618, 64,299, right? So if we start breaking down, we have this movement here. If we come up, get a good trade here, I'm going to look to trade it. But if not, then I'm going to look at breaking down below 64,299 for that next level down. That's what I personally am doing. This is all my own thoughts, guys. Do your own due diligence if you plan to trade these Ponzi markets. Looking at Solana. Look how beautiful Solana is tracking, moving up towards a 2618. Man, this is an explosive move. 204,853. 204,853. If actually we pull down a fib here, can pull down our fib here to our market low. And you can see the 786 lines up right on top of the 2618. So 204, key resistance area. Remember, I told you I'm not interested in trading the alts. Again, me personally, until I see Bitcoin actually topping or breaking out to the next level again. Okay. So if Bitcoin is topping here at that 73.7 area, I want to see if we can hold up here at that 204 level, because just like everything else, I expect it to pull back down when the markets retrace before breaking out to more upside. If we look at Ethereum, got right up to the 786, 40.13. Look at that wick above, right back down. Watch this for key area of resistance on Ethereum, because once again, on a 5-day chart, you're printing a larger potential double top shape, just like you did over here for the last top, okay? So we're going to watch this in confluence with Bitcoin as well. Let's go ahead and go international. If we're looking at the DAX, guys, looking at an 8-hour time frame here, we had contract rollover here on the mini DAX, FDX M1. And if we look at this, let's go ahead and pull a fib here from this W pattern. We got right up to the 2618, 18,282. Price at closing was 18,271. You're right up against the 2618. So what I'm doing with the European markets is if the US markets are in fact topping, the DAX still broke out to more upside, as did the Paris market. But if the US markets are in fact topping, I'm looking to trade trades on the European markets, because when the US markets dump, guys, the European markets will in kind as well. Perhaps not the exact same day, but they will soon follow suit. If you don't believe me, go overlay the S&P or the Dow on the DAX or on the CAC 40 or on the Euro Stocks 50, which is what we're going to look at now. Here's the projection we gave you to 4,999, and there's your hit on the fib, and here's your little bit of a sell-off. Again, holding up for right now in the daily time frame, but all of these indices as well. I think we're seeing some bearish divergence. Yep, we have prices going up, money flow rolling down, momentum down. So everything is basically bearish divergence, but you're looking for topping action, which is what you look like to be putting in right here on Euro Stocks 50. Let's finish it off with the Nikkei 225 in Japan. We hit our magic 40K number. The Japanese Bank of Japan is the day before the Fed. And we're going to see if they're going to keep their yield curve control, their negative interest rates. They actually have negative interest rates. If they don't, and they actually go to zero, we could see some more volatility. And if they raise above zero, I'd expect even more volatility. But we hit the key psychological number of 40,000 in the marketplace. Would love to see this come back up and give us some type of other pattern, other shape to trade here on the daily time frame. We'll see what the Bank of Japan does. They're the last ones to actually start hiking. They haven't actually hiked at all. They have negative rates. Guys, I hope you enjoyed this video. Leave me your questions and comments. As always, I always reply. I will see you on the next transmission. Take care, everybody.